Hello, welcome to the European Open Briefing for Thursday, June the 28th. I'm Rafi Boyajian, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar has risen to one-year highs, as despite the trade worries, the dollar remains in strong demand. It is also being affected by quarter-end flows, but overall market sentiment is being dampened by the growing concerns about a possible trade war. That's especially weighing on global equities. We can see though that in Asia this morning it is a mixed start. The worst hit are Chinese shares, which have fallen to 2-year lows. That in itself is weighing on other Asian equities, but we are seeing some gains. For example, shares in Australia are up this morning, and in Europe we do have a bit of a mixed open as well. In European currencies, the euro and the pound continue to remain under pressure, but the New Zealand dollar has slumped to 25 months lows following the RBNZ policy decision, where although they kept rates as expected, the policy statement was much more dovish than had been anticipated, and some market participants are now even pricing a possible rate cut, though the main scenario is that we will see a rate hike in late 2019. The Canadian dollar is also struggling. It hit a one-year low, although it has managed to reverse some of those losses. It's slightly firmer this morning. Gold prices continue to fall as well, falling to fresh 6-month lows, still seeing no gain at all from the risk of sentiment, but oil prices jumped sharply yesterday. We do have a bit of a profit taking this morning. Oil prices are down, but we saw WTI hitting 3.5-year highs after a big drop in US crude inventories from yesterday's EIA data for the prior week. If you look at today's main movers, we can see Euro Pound up 0.3% this morning, but at the bottom of the table is Kiwi dollar. Let's now take a closer look at the US currency. We can see the dollar index, which measures the greenback against 6 major currencies, is currently trading around 95.50, near one-year highs. Dollar yen has risen back above the 110 level. We did see risk sentiment improving yesterday after President Trump said that instead of specifically targeting Chinese foreign investments, that they will probably set up a committee to review individual cases of foreign investment into sensitive US technologies. That's a slightly softer stance than previously indicated, but later we heard from the White House economic advisor Larry Kudlow saying that that decision does not represent a softening stance towards China, and we saw market sentiment deteriorating. After that, we saw US stocks closing lower. The S&P 500 closed at a 1-month low. Let's now turn to European currencies. We can see the euro falling very close to the June low of 1.1507, which was near May's 10-month low. We're seeing sterling looking even more bearish as the cable hits a fresh 7-month low of 1.3064 against the US dollar. We do have the EU summit in focus for the next couple of days. EU migration policy will be top of the agenda. If EU leaders fail to reach a deal with Germany's Angela Merkel, that could put Merkel's coalition at risk, and Brexit will also be discussed. If the UK fails to make much progress at the summit in the Brexit negotiations, we could see sterling falling even further. And finally, let's have a look at the Canadian dollar, because the loonie yesterday did hit a 1-year low 1.3385 to the US dollar. That's a USD CAD hitting a 1-year high. It came after Bank of Canada Governor Stephen Poloz initially sounded dovish, saying that what's happening on the trade front with tariffs, higher tariffs, that will be prominent in discussions in the July rate decision. But afterwards, he turned a bit more hawkish, saying that we are in a situation where the economy will warrant higher interest rates. So we saw the loonie firming somewhat. It's currently trading around 1.3329, and that keeps the options open for a rate hike at the next meeting of the Bank of Canada on July the 11th. And quick look at today's economic calendar. We do have the Eurozone economic sentiment coming up shortly, followed by German flash inflation, the final GDP readings for the first quarter out of the US, as well as the weekly jobless claims, plus speeches by Bank of England and Fed policymakers. That's it from me. Thank you very much for watching, and have a great day.